Hello and welcome to Friday's Targets in Focus on the last trading day of the week. Today I'm joined by Sireen Harajli, FX Strategist at Credit Agricole in New York, to discuss the performance of the Brazilian real and the Mexican peso. So let's begin with the Brazilian real. This month the government started loosening capital controls it imposed in the past 2 years. After the real fell to a 3-year low on November 30th, the central bank also conducted an auction on Wednesday to sell as much as $2 billion on the spot market with repurchase agreements. Now, what else do you expect from the central bank over the next few months?
The short answer is that we expect more of the same, at least in the near term. The main issue with Brazil is finding a balance between growth and inflation. Brazilian growth has been one of the more disappointing calls over this past year, as markets were surprised by the weaker growth, especially in the second half of the year, particularly considering the stimulus that has been injected into the Brazilian economy. For a while, the central bank was intervening in FX markets to keep the Brazilian real levels that will help manufacturers retain their competitive advantage. Yet too much of a weak Brazilian real can bring in negative effects such as inflation, which is a real threat for Brazil considering its very tight labor markets. So we believe that in the short term, the central bank has found its comfort level where the real is weak enough to support manufacturing exports, but not so weak as to import inflation. However, we believe that as 2013 comes underway, the growth picture in Brazil will be improving, and it will bring with it higher inflationary pressures in Brazil. So this is why we see that the central bank will allow for more appreciation in the Brazilian real. So we actually look for dollar Brazil to reach the 204 level in 3 months, and we think that by the end of 2013, it'll be reaching the 2 level.
And now let's have a look at the Mexican peso. How is the dollar against the peso performing right now, and what should traders watch out for?
So the Mexican peso is a very different story, as it is a fully convertible currency with very little risk of central bank intervention. So movements in the Mexican peso are very highly correlated with the U.S. dollar, given its strong economic ties between the two countries, and this is why we saw the peso sell off recently on signs of disagreements in Washington over the fiscal cliff. Actually, we think that the Mexican peso is one of the currencies that are most sensitive to any risk events going on here in the U.S. So we do expect that the peso will remain vulnerable until we see this fiscal cliff issue in the U.S. resolved. And now for the longer term, we see a lot of positives in Mexico that back up our bullish view on the Mexican peso. Fundamentals in Mexico have been quite strong, supported by both local as well as foreign factors, which will continue to support growth throughout next year. The key factor for Mexico is the structural reforms that are being proposed currently by the new government. Those would open up the energy sector to private investors. So this will not only help economic growth in Mexico, but also it will attract more foreign flows, which will support the Mexican peso. Also, Mexico's proximity to the United States, that is economically growing, even though, growth in the U.S. has not been ideal, but it still continues to grow, and it continues to look much better, for example, compared to the Eurozone or Japan. So we think that that will favor the Mexican pesos against other currencies. And finally, for the Mexican peso, the Mexican central bank is very strong and very credible. The central bank in Mexico rarely intervenes in FX markets, so this allows the peso to strengthen with very little risk of intervention. So these are some of the reasons why we are actually quite bullish on the Mexican peso. We do expect that it will reach 12.50 in the next 3 months, and we do expect it to continue to appreciate to 12.20 by the end of 2013.
Thank you very much for today's interview. Do stay tuned to Dukascopy TV, as my colleague Monica Gibson will be looking at the week's events that have had an impact on the markets in the weekly wrap-up. I'll be back on Monday providing you with more economic news, but for now, have a pleasant weekend.